Okay, it is Joel Olson here, and I'm doing another variable rate update, and I'm talking about this curious case of falling rates. And so, you may remember earlier this year we talked about the different videos we have. We talked about rates as of March, the beginning of March, when we had a Bank of Canada meeting. They hold the rate static, and all indications that rates will be very static or stay the same for throughout a year, hopefully with the idea that we can move CD rates lower coming into 2024. Now, what a March it's been. And, there has been some really rapid changes predictions. So um, I would say at this point, and we're going to dive into some details here, most people predicting some rates being much lower, even by July at this point. And so there's some reasons for that, and I'm going to go into that. But even by July, rates being even lower, and at this point, fixed rates have really started to move lower and lower and lower. Um, I talked in this in length. If you didn't see last week's video, you're going to want to go take another look at that, because we're talking about what's going on with the state. So what we have right now is a result of a number of financial institutions collapsing. We have a few things that are important right now. First of all, we have regional banks in the United States that have collapsed. Many of those regional banks, like Silicon Valley, lots of deposits are not insured. So I think I mentioned this before, but what happens is that most banks have insurance. You have $250,000 worth of deposits. You are able, that if the bank fails, the government backstops. 90% of deposits held by the Silicon Valley Bank were not did not meet that criteria. So that means that most people had more than $250,000 in the bank. So that's something that people don't talk about. We're talking about some, fairly liquid folks. And so number of other collapses that have happened in the meantime. It's estimated that the vast majority of money, which amounts to hundreds of billions of dollars, has been leaving the balance sheet of most regional banks in the States, moving to only five of their most major banks: Wells Fargo, Citibank, and a few other of their bigger banks, and a significant amount of money going to the sidelines. So what I mean by that is that people are pulling their cash out and putting it into things like cryptocurrency or precious metals, or even cash on the mattress. These are all things that are magnifying together because people are afraid of putting their money in the bank. Now, this affects the bond market in a roundabout way. The bond market's what set fixed rates. And so a big reason why rates would go up is that they're trying to control the money supply, and so increase rates, and so money is not going to flow as freely because it's more expensive. The problem is right now, and we haven't quite seen the reality of this, is that a lot of money that was in the system is now, exactly what happened during COVID, has now went right to sidelines, out of the system, into cryptocurrencies and precious metals and things that are a little more illiquid, not being put through the system and through the economy. And so that is, that is a big deal that's happening right now. That means that bond yields have moved down. And so a best way to understand it, and I know if you're more versed in these things, you may disagree with the simplicity of the explanation, but that it means that, like, basically when you're looking at a fixed rate, a bank, buys a fixed rate bond for, 1%, and they got to get a yield on it. And so the lower that they can get, the lower that their yield on that end. So if they buy it for 1%, they got to get 3%. If they buy it for, 0.025%, they got to get 1%. These are all things that happen. So these yields have been massively shifting. And so that is a result in fixed rates moving down as we see bond yields being impacted. One of the reasons around bank collapses has been that a lot of these banks, I talked about in the last video, are fractional banks. So it means that if you put $10 in, they only need to keep $2 and they invest the rest of this into other types of assets. And some banks don't have to keep any of it on deposit. They take your money and reinvest it. And then what happens is people come there looking for deposits, called a bank run, and then there's not enough money and they run out of cash. Right? I was in the Royal Bank a few weeks ago looking for $5,000 cash. They couldn't get it for me. They didn't have the $5,000 of cash. They didn't have it. So that's a big deal. That's a big deal. And so that has impacting the bond market. A lot of these banks had bonds that were originally at the lower rates, and now as rates have changed, that's made an impact on that hand. So fixed rates moving down. Now, how does this impact your variable rate mortgage? Your variable rate mortgage, obviously follows the Bank of Canada meetings. There's Bank of Canada meetings, and they set the rate at those dates, moving it the same or moving it up or down. Now, with what's happened, it is very likely at this point that we have the economy in many areas into a tailspin. I worry most that the conversation we've had over the last 4 months have not been people saying, oh, I'm going to sell my house. People are saying, I'm going to massively cut back. The cost of mortgage went up. We're not going out to eat. We're not using discretionary spending. That's a big impact to the economy, and I imagine that's happening in a big way. You have some dark clouds on the horizon when it comes to commercial real estate. In the United States, they're estimating $1.5 trillion worth of loans coming due next year, where people have got commercial properties at lower rates, and they're going to have to refinance or renew them at much higher rates. Where that is a bigger deal than before is that when they had them before, they had before COVID, they were full of tenants. Now office space is becoming something that's not even necessary for lots of major companies. So you have a lot of folks that don't need that office space. So those landlords are going to have more money, be paying more money, and be able to generate less revenue on them. These are all things that are going to cause some massive impacts and fractures of the banking system. And both the Fed and the Bank of Canada will feel pressure sooner than later to lower rates to keep the economy from going into what will be a very, very dark recession. And, although we didn't think that a month ago, all signs are pointing there. And every single week we have a number of other events, a number of data that's pointing very quickly. So my advice to you at this point is, if you are set on a fixed rate, now is your best opportunity ever. Like, we are not seeing competitive fixed rates at banks. We got to move each another lender. But if you want to get into that fixed rate, now's your time. Call us. Let's do it. Let's make it happen. Joel, you're saying, are you recommending this? No, I'm still not recommending the fixed rate. But I'm saying, if the fixed rate is the deal, now is the time to get it. But do you think rates will be lower? Yeah, I think that probably those fixed rates will go lower. But, I think that, if you need that for stability and in your life, I think that's okay. What do I think about the variable? I think the variable will catch up here, where you're going to see a massive difference. That variable is going to go down, especially in the summertime, and I think that's going to reward you immensely. And so, if you're, I'm the same. Hold on the variable. Hold on just one more, a little bit tighter, and you're going to see some impact from that perspective. As always, I'm available for any questions and concerns. I want to talk to you about your mortgage. If you have a friend that could be helped by this video, please do share it with them. I would love to help them with any mortgage needs, and anything we can help as far as your mortgage. Thanks so much. Have a great day.